one.
Hi, my name is Jon Tobias. I'm a loan officer with Nova Home Loans, and I wanted to discuss with you today HomePath financing. This is financing that is provided through Fannie Mae, and it's only available for Fannie Mae owned properties. These are properties that foreclosed that Fannie Mae owns. They're now remarketing them, and they offer special financing if you buy these properties. And HomePath financing's got a lot of great benefits to it. Number one, you can buy an investment property with only 10% down. Traditional finance requires 20%, so it's going to give you an advantage leveraging your assets to purchase more properties. Two, you can buy a secondary residence, which is typically a vacation home, for 10% down as well. And for a primary residence, you can go as low as 3% down, which is much lower than most traditional other types of financing. The other great thing about HomePath financing is that there is no monthly mortgage insurance, which can save you a lot on your monthly payments. Monthly mortgage insurance is typically required whenever you put less than 20% down. Now HomePath, even though you're putting less than 20% down, does not require this monthly mortgage insurance. So you're going to have a savings on your payment. Next, you don't have to have an appraisal. Appraisals are huge in that they reveal a lot of information about the property you may or may not want to know. And with today's lending environment, when there's issues with the property, such as missing appliances or broken windows or missing cabinets, typically these things need to be fixed prior to closing on the loan. Now, if you have no appraisal, you don't know those problems are with the property. So you can purchase it with no issues, and it's not going to have any holdups in underwriting because there's not going to be any issues presented to you. You can, of course, get an appraisal if you like to. We don't require it in this case, like every other lending program would. Now, Fannie Mae loves to see HomePath financing when you make your offer to them. That's one way for them to recoup some of their losses. They engage in another borrower, and they will usually take a contract for HomePath financing above other types of financing because they want that borrower back, or they want a borrower back in return for the loss they took. So it's very helpful in that respect. Now also with condominiums have also been an issue recently in that there's so many defaults in these condominium complexes. There's a lot of HOA delinquencies, some of these projects have fallen into disrepair, and there's too many investors that have purchased in them. Now with HomePath financing, you do not need a condo questionnaire. Now that's typically required in every other type of lending program that we have to send to the HOA to fill out and answer all these questions about the property that can be very revealing, and there's certain requirements that we've got to have, and if they don't meet those requirements, it's not eligible for traditional financing. With HomePath, you typically do not need a questionnaire, so it's going to open the door to even more properties on condominiums. So it's going to be a great tool. Now you might ask, how do you qualify for HomePath financing? You're going to qualify just like a normal loan. You're going to need full documentation, which means your most recent 2 years income, your most recent 2 years employment history. You need asset statements, credit report. Your minimum FICO score in this case is typically going to be a 660 FICO score. Now with FHA and VA, sometimes you can go down to 600 or 620, but HomePath will allow you to go down to 660, which is still an advantage because you have no monthly mortgage insurance. So that's why they've got that FICO requirement to be a little bit higher. So if you'd like to know any more about this great financing product, please contact me. My contact information is at the end of this video, and we'd love to business and tell you a little bit more about HomePath financing.